Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets companies try to hide in plain sight. Today we're diving into OOMA Incorporated's latest report, and let's just say their latest earnings announcement might be more interesting than a perfectly timed dial-up connection. Before we jump in, if you like your corporate news decoded without the jargon, hit that subscribe button. And for more real-time discussions and to connect with fellow number crunchers, join our Discord community, link in the description below. Alright, let's get straight to the good stuff. OOMA Incorporated, the folks behind those communication services, just dropped their financial results for the third quarter of their fiscal year 2026, which ended on the 31st of October of 2025. Now, this report here is a Form 8K, which basically means it is a way for companies to announce significant events quickly. And in this case, the big news is their latest earnings. It is like they're telling us, hey, here is how we did, and here is the official announcement to go with it. Before we dig into the numbers, it is good to remember OOMA Incorporated is a publicly traded company. Their common stock trades on the New York Stock Exchange under the ticker symbol OOMA. This means their financial health directly impacts investors, and these reports are crucial for understanding where they're headed. So what are these results telling us about OOMA Incorporated's business? Well, this filing is primarily about their financial performance, and it points us to a press release that contains the real juicy details. While this document itself is more of a cover letter for that press release, it is the financial results that truly tell the story. We need to see if their business is growing, if they're making more money, and if they're managing their expenses well. The most important part of these filings, especially an 8K that announces earnings, is the financial picture. This particular filing directs us to Exhibit 99.1, which is OOMA Incorporated's press release detailing their fiscal third quarter 2026 financial results. This is where we find the actual numbers that reveal the company's performance. Thinking like a savvy investor, we want to know if OOMA Incorporated is growing its revenue, controlling its costs, and ultimately becoming more profitable. Are they attracting more customers? Are their new products or services taking off? Or are they facing increased competition and market pressures? The numbers in that press release will give us a clearer idea. Even though this filing is brief, it is the gateway to understanding their most recent performance. The key is to look beyond the official titles and focus on what the figures signify. Are they beating expectations, meeting them, or falling short? This directly influences investor confidence and the company's stock price. And finally, to wrap things up and make this official, we have the signature. This confirms that the report has been submitted by the company, and in this case it is signed by Shig Hamamatsu, the Chief Financial Officer. This tells us that the financial information has been reviewed and approved at the highest level of the company's finance department. It is the final stamp of approval, if you will. Now, let's put on our investor hats and look at what OOMA Incorporated's latest financial results might be telling us, based on what we'd expect to find in their press release. If revenue is up significantly, say by more than 20%, that's a strong signal that their services are in high demand and they are likely gaining market share. Conversely, if revenue is flat or declining, it suggests they might be struggling to attract new customers or retain existing ones in a competitive telecom and cloud communications market. We also want to look at profitability. Are their expenses growing faster than their revenue? If OOMA Incorporated is spending more on things like sales, marketing, or research and development without a corresponding jump in income, it could mean they are investing for future growth, but it could also signal an inefficient operation. A healthy trend would be to see their net income or profit increasing at a solid pace, ideally outpacing revenue growth. This indicates they are not just selling more, but are also becoming more efficient and valuable. Consider their customer acquisition costs versus the lifetime value of those customers. If it is costing them a fortune to get each new customer and those customers don't stick around, that is a red flag. On the flip side, if they are acquiring customers efficiently and those customers are loyal and generate steady income, that is a sign of a sustainable business model. We also need to keep an eye on any adjustments to their financial guidance. If they're raising their future profit forecasts, it is a bullish sign. If they're lowering them, it's a cue for caution, indicating potential headwinds or challenges ahead that management might not have anticipated or fully controlled. Looking at OOMA Incorporated's position in the market is also vital. They operate in a dynamic sector with both established players and nimble startups. Are they innovating faster than their competitors? Are their pricing strategies competitive? Are they expanding into new markets or product lines effectively? The financial results are a scorecard for these strategic decisions. A strong quarter could mean their strategic bets are paying off, while a weak one might indicate a need to pivot. For OOMA Incorporated, a key risk to watch would be the increasing commoditization of communication services. As more providers enter the market, Price wars can erode margins. Their ability to differentiate through superior technology, customer service, or unique features will be crucial. Another potential risk could be rapid technological changes. If they fail to adapt to new communication platforms or standards, they could quickly become obsolete. However, opportunities often lie in hybrid work models and the continued shift towards cloud-based solutions. Businesses of all sizes are looking for reliable, integrated communication systems, and OOMA Incorporated is positioned to meet that demand. Their ability to upsell existing customers with additional services or penetrate larger enterprise markets could unlock significant growth avenues. The trend towards unified communications where voice, video, and messaging are all integrated into one platform is another area where they could capture significant market share. In conclusion, OOMA Incorporated's fiscal third quarter 2026 financial results, as announced in their press release, will be the true indicator of their current health and future trajectory. We are looking for strong revenue growth, solid profit margins, and efficient customer acquisition. Any signs of slowing growth, increasing costs that outpace revenue, or a downward revision in future guidance would warrant a closer look. The company's ability to innovate and adapt in the fast-paced communications technology sector will be paramount to its continued success. Alright, that is our initial decode of where to find the crucial information in this OOMA Incorporated filing. What are your thoughts on their latest financial update once you dig into the press release? Do you see opportunities or risks that we've highlighted? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more straightforward corporate financial analysis. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and we'll see you in the next decode.